Hello to all traders and welcome to another engagement brought to you by Orbex. So we're looking at a lot of good data coming out of America in the last few months, but it seems that we are now seeing that it is a little bit more subdued as we go into the new year. So the first one of the year, obviously this is December's data, and we are now looking to see what's going to happen in the near term as well. So thank you for joining me. My name is David. I represent Orbex. I'll be joined shortly with Daniel, my other special guest, and just want to go through a quick disclaimer before we start. So I'll just quickly show you what is to be expected today. So as I said, it's the NFP trading event. So we're looking at the pre-data, the post-data, what are the natural and more optimistic scenarios for most of the dollar pairs. This is including gold and oil as well. Big movers in the market that we've seen in the last few months. 2022 has been a year to forget for a lot of companies, a lot of the big stocks that have been really struggling, like Tesla, for example, hitting their lowest rate in the last for 2 years. We're seeing some other big stocks that have plummeted quite significantly as well. So let me know what you think and what you're looking into as well. So let's just go through a quick disclaimer before we get into the NFP. So foreign exchange trading and investment in CFDs can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. Very important to note. This webinar is provided for information purposes only, and no information contained here constitutes a solicitation for the purpose of the purchase or any sale of commodity, security, or investment. Nor should serve as basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or any supplies. Without further ado, let's just take a quick look at the numbers we're seeing or expected to see in the next few days ahead. And because this is a live webinar, please feel free to ask any questions as we're going along. Any interaction is always welcomed with myself and obviously my special guest speaker, Daniel, that will be joining us shortly. So as I said, a little bit subdued. We had previous number, 263,000 jobs being added, 200,000 supposedly, or just over 200,000 now, supposedly being managed. And we are seeing that the dollar has been very, very bullish in the last few hours. But is this just a slight correction? And will we see the dollar really start moving back towards a little bit of a decline? We'll look at the chart shortly, but let me know what you think, what you've been trading on, and what you are seeing in the markets as well. We're seeing, obviously, just want to bring your attention to the bottom of the screen here, this chart that we've looking for the NFP numbers. Obviously, the highest NFP number that we had was this time last year. And actually, it was the month after, because obviously the data is 1 month before. So in America, because of the big holiday season, big spending season as well, we are expected the next month to be quite a big jump in not only retail sales, but job numbers as well. Obviously, a lot more people are hiring during the holiday season. So this is something to look out for as well. But for December, did America add that many jobs, and what is in store for the next year? We've got a lot of information coming out that there's going to probably be not only recession in America, but recessions globally. We've got obviously the Fed moving back on its monetary policy approach as well, which has seen the dollar taking a back seat. The dollar has been very, very weak recently. So this is something else we're looking at as well. So I don't want to bore you too much with the slides. I just wanted to point out that this is just what we're looking at. Unemployment likely to remain at 3.7%. And December's NFP release was the weakest in 2 years. The last time that we had this was December of 2020, so quite significant there as well. So we have had a few hit and misses throughout the course of the year. As I said, February, which was January's data, 714,000. Then we had July, which is June's data, 537,000. But since then, as you can see, failing to get above 300,000. So that's quite significant. Really big misses from the American economy trying to add more jobs. So just going on a couple more slides. As I said, very, very simplistic. Don't want to put too much jargon or too many charts at you. Looking at weekly jobless claims, they have been hovering roughly around 200,000. They did spike up to 240,000 just above a few weeks ago. Remember, this is a weekly jobless chart, so it is actually quite a good reading for how America is coping with moving out away from the pandemic. And also annual inflation did slow again for a 5th month in a row, 7.1% now after hitting a 40-year high of 9.1%. And this was in the middle of the year, so 6 months ago. But will it get to that inflationary target of 2% anytime soon by the Fed? Probably not. It's not looking like it's going to start happening anytime soon. We are looking at a terminal rate for the rate hikes of roughly about 4 to 5%. But is it going to happen? We'll speak to Daniel shortly when he comes on, and he can tell us what his thoughts are on that. But annual inflation looking better than what it did. If we look at 9.1% versus 7.1%, 2% difference in just over 6 months, that's quite significant as well. You have to forgive me today. I've got a little bit of a sore throat, so obviously the talking doesn't help too much when you're trying to rest it. So let's just go through a few other of the charts. Excuse me. So retail sales data did actually decline. It went back into negative territory as minus 0.6%. First time this has happened in 4 months, when we saw another negative reading in July. However, the retail sales data is 2 months behind. It's usually produced 60 days after approximately the month end. So the data that we got for November was for September, if I get my months correct. Yes, I think that's correct. So as I said, the retail sales data is supposed to spike a little bit higher due to the holiday season. Obviously, we've got Thanksgiving in November. We've got the holiday season coming in December. So the retail sales data is supposedly looking a little bit higher as well. Nikhil, thank you very much. He's asked me about gold again. He's always asking about gold, which is very good. We're just going to look on the last slide, and then we're going to jump right onto the charts. Just looking at private businesses as well, ADP, it did actually have a surprise jump at 235,000, and this is above market forecast of 150,000, so quite significant there as well. So looking on the charts, I just got a basket of the charts that I usually look at, the assets and instruments that we are looking at, the main movers. We'll look on gold first of all, like we usually do, because since the dollar in the last 24 hours has had quite a big growth factor, we've seen gold take a little bit of a backseat. But this is supposedly just a correction, because we are looking most likely bullish in the long run. Obviously, with every bull run, there is a correction, and this is what we're seeing now, another correction. But we are now seeing possibly another move higher. So we are expecting possibly another push to the upside, despite the NFP numbers as well. We are expecting another move to the upside for gold. But obviously, if NFP numbers come in a little bit deflationary, then we can see that gold will start moving higher as well. So we just pull this back to a daily chart. I just want to show you the whole outlook. We've seen this vast V-shaped recovery in gold since we had this triple bottom at the 1615 handle, and since we've had that, we are now looking that gold is bullish in the near term and long term as well. We saw this big spike in gold not so long after that, rising above, well, going over $50 there. So at $150 there. But since then, as you can see, it's made over $200 in gains in just a few short months. So how far can this bull rally go? Well, at the moment, as you can see, we always look at the latest swing highs and swing lows in gold. And at the moment, I don't think gold is done. I think it's going to have another move to the upside. As I said, we're looking at a slight correction now. If we just zoom in, so it's a bit easy to see. Just take these off so it's a bit less worrying. Too many arrows. So as you can see, very vast bull run. But since then, in this bull run here, we've had slight correction after correction, a move to the downside just to test this channel, and then back up, and then back down again. And as you can see, another move to the upside. So now we're seeing this fifth consecutive correction. And as I said, analysts and economists that I talk to on a daily basis have said that they are expecting a slight pull down, roughly to about 1800, the 1800 handle, and then we can start moving higher and above this particular last spike, which was at roughly about 1865. I would say roughly about 1860 would be a good target for the next push. That's only $25 away, so $25, $30 away. So this is something that we're looking at in the near term for gold. Very, very good prospect for buyers, though, that's for sure. So sorry about that. Just have to clear my throat every now and again. Hopefully this presentation won't hinder me too much. So we're looked at gold just now. The next elephant in the room, let's say, the next move to the chart to look at is euro dollar, because it's been very it's plummeted quite significantly, the euro dollar chart, because we've had such a strong dollar in the last 24 hours and 48 hours. So if we look from the beginning of the week when the market opened after the new year, as you can see, plummeted down by 160 pips. And then we've had big swings of another move of 100 pips down, and now another move of 150 pips almost down. So these big swings in just a matter of a few days are not very common for the euro dollar, but obviously because the market has just opened, we are seeing now what is in store for the dollar. It's going to be very choppy, very unpredictable at the moment, because we're seeing that it isn't taking the normal route of where we're going in the near term as well. If we look back at the euro dollar, as you can see here, for the most of 2022, we had this very big bearish move to the downside, hitting roughly about the 95-cent handle before propelling back up, breaking through parity once again. Excuse me. And now we are looking at the 105 handle once more. Vast consolidation here for now, though. And as I said, we are seeing this kind of like open-ended triangle that is looking like it's going to possibly give us a little bit more of a clue where it's going to go. So if we just zoom into that, as I said, we're at the tip now at the downside. This is on the daily chart, don't forget. But if we look on the hourly chart, as you can see, we are seeing possibly from the beginning of the week and the beginning of the year, obviously, a very strong dollar movements. But it is supposed to be just a correction, and we are expected that the dollar will resume its big movement in the market as well. So looking at cable, just had a few comments about cable as well. Thank you very much for those of you that are asking. We are still seeing, again, very much like, put on the daily chart, very much like the euro dollar, very bearish for most of 2022, and now moving higher, and obviously slight correction. But like I said recently with the euro dollar and gold, we are expecting just a slight correction before prices find support and start moving higher as well. And if you look at this, it's making a very nice flag. And obviously flags are reversal patterns. So when we finish with this support, we are expected to move higher and break this particular level as well. So let me know what you think about that. And obviously, if you're trading cable, be very aware that there's going to be a lot more news coming out of the UK as we go into 2023. We've got a lot of the UK Parliament pushing for a general referendum. So this would possibly see the Labour Party actually be put back into Downing Street after 13 years of Conservative power. So that will be something that will shake up cable quite significantly. So just keep an eye out for that. We've also at the same time got some Canadian dollar news as well, but you've seen Canadian dollar very big swings. It's now recovering nicely to the consolidation that we had not so long ago. But as you can see here, moving lower over 200 pips and now bouncing back over 200 pips. And don't forget, as I said, this is just from the beginning of the week, only 5 days. A 200 pip swing to the downside and upside is very significant, and it's looking like it's going to start possibly moving a lot higher. So like I said, when there is NFP data and Canadian data coming out at the same time, it always is interesting for the loonie, also known as the dollar Canadian pair. We've got unemployment rate, we've got average earnings as well, and we've got employment changes as well in Canada. So this is also very good, something to look out for, because it is interesting, and we are looking to see what's going to happen as well. Thank you, Christian, for your comment. Hong Kong dollar to the moon, possibly. We're seeing now what is in store for not only American dollars, obviously with the NFP, but the global economies as well. But with China lifting its COVID restrictions, are they doing it too soon? Depending on what press release you listen to or read, 250 million people still infected with COVID, and new variants actually being found in certain parts of China as well. So this is very detrimental for China. The world's second biggest economy, still looking to be the world's second biggest economy by the end of this year, but it is actually supposedly going to hit a fully fledged recession in the near term as well. So let me know what you think about are China lifting their COVID restrictions too early? Is it something that they've been forced into? And also, is it something that is not going to really help the country as well as we go into 2023? So looking at gold, looking at gold, we've seen gold, looking at oil now at the moment, excuse me. Oil has been a little bit worryingly having a sell-off at the moment because we're seeing what's in the near term as well. And Daniel is going to join me shortly. Thank you, Abba, for your comment. What are we selling? What are we buying? We're going to go into that shortly. Hi, Daniel. Can you hear me?
Oh, hey, David. How's it going?
Great, thank you. Thank you very much. Thanks for joining us today. Just got a few questions about gold and the Hong Kong dollar and what we're buying and selling as well today. So glad you can join me. Just taking our viewers through a few of the basket of main currencies and assets that we usually do. Just looking at gold and the dollar. The dollar has been quite strong in the last, well, I was going to say since the beginning of the week, but it's technically the beginning of the year, isn't it? If you
That's true, yeah.
from the first trading days. So with that being said, do you see gold? Do you see the dollar still progressively, outplaying most of the main competitors that it has, like the cable and euro, or do you see it as just kind of like something that's just started the new year and it is going to start fading away quite soon?
Well, you're starting out with a pretty complicated question because there's a lot of moving parts to that.
There is, yeah. I kind of
Yeah.
threw quite a few things at you there.
Yeah, and like is to make a short summary, it really depends on what the Fed does. There's a lot of debate over what everyone expects, whether the Fed's going to keep raising rates, or they're going to stop, or some people are suggesting that they might start cutting rates sometime in the future. So how strong the dollar is going to be really depends on those expectations, and I guess it's also going to depend on the data, which is coming on later. Or is it this week, next Wednesday, I think it is, or is it Thursday? I always keep getting those 2 days mixed up. They're going to have the CPI from the United States is coming out,
Yeah.
so that might change expectations a little bit. So that could change the so far year-long trend that we've been having.
Definitely, yeah. Because I was just telling some of the viewers that from the beginning of the week or the beginning of the year, like euro dollar has like had big swings in the market of over 100 pips. Now it's kind of like trading at the 105 handle after reaching
Hmm.
almost the 108 handle. So is this, as I said, is it? Do you think it's just a case of like people getting back into trading from the new year, and then we can sink our teeth into the actual fundamentals next week?
Yeah, that does seem to be the thing because I don't know if you've seen it, but at least for me, at least Monday, Tuesday, Wednesday, they've been pretty light trading. There hasn't been all that much data also because some of
Yeah.
the data was released early, and then a lot of the major stuff is going to be coming out till later in the month. And then
Hmm.
also we have kind of an early start to earnings seasons. It's going to start next Friday,
Yeah.
so everyone's probably I don't know taking one last. Oh yeah, that's the other thing is because normally you get like 2 weeks of vacation at the end of the year because of how the holidays lined up, and this year
Hmm.
it's sort of like you only got 1 week. So I think a lot of people are sort of just hesitant to come back to the markets at the beginning of the year, and so that's why you had extra volatility, and it's been
Yeah.
moving a little bit differently. And then of course everyone they have the holidays, they're feeling really good, and they come back and it's like I do have to go back to work,
Yeah.
and then they're not in a particularly good mood when they start trading too. So that's just another thing.
That's true, yeah. I just wanted to pick your brains a little bit on the direction of oil for this year. Now that we've started the new year, obviously the sanctions are now in place for Russian oil and gas. There's going to be a lot less moving throughout the world, not only Europe, but a lot less availability for this globally. Do you see
Yeah.
oil really having a bit of an uptrend due to this, the demand that we're going to need for 20 or the lack of supply, let's say in 2023?
Well, that's another one of the big questions whether or not there's going to be a recession to reduce demand, and
Mm.
a lot of it over the next 3 months is really going to depend on the weather.
Hmm.
And don't try to predict the weather tomorrow, let alone 3 months from now. So This like, but also oil had a really pretty big drop at the beginning of the year, which actually caught me a little bit kind of by surprise. I was expecting it to
Yes.
come down a little, but not that fast.
Yeah, I've got a chart on me on the screen now. Yeah, it came from like $80 to the lower regions of $70, and nearly a $10 drop off in oil
Yeah.
in just a few days. So quite a bit of a surprise there.
Yeah, well, there's a couple of things going on. Like you have the Keystone Pipeline is still not. Well, there's two keystones. There's the one that's really controversial, which is the XL, which everyone kind of gets the two of them mixed up, and then you
Yeah,
have the original one, which is still functioning at half capacity, I think, and that is kind of reducing a bit of demand because that really pushes oil down from Canada to go to export, which would be used mostly in well, Europe has a significantly higher demand now because they don't want to buy from Russia. So that could end up causing a little bit more distortion than you would normally expect. Normally that would only have an effect on WTI, but it seems to also be falling over to Brent. And
mm,
then you have the somewhat contradictory predictions from the IEA and OPEC. Sorry, where one of them says that they expect there to be more demand than the other, and so it really depends on which
exactly.
ones. Yeah, so there isn't really a consensus. You can go and say, well, here's a report that says this, and I'm going to go along with that report because someone else can point to the other report that says the opposite.
Exactly. Or we can just view these $10 drop-offs every now and again on oil and see just
Yeah.
try and make some sense of that. Another thing is just moving over to the Chinese market quickly. We've had reports that China will start lifting their lockdown measures, that they've tried to have this zero dynamic COVID for the last year, but it hasn't really worked out because obviously there's been
Hmm.
protests in the street. But with over apparently 250 million people in China still having COVID tests positive. Do you think they're lifting the lockdowns a little bit too quickly? And do you think it's going to be beneficial in the long run for China?
Oh, well, it's a little kind of complicated. One, they're going to lift all their key. They're going to go through with it. Apparently, it's this weekend that they're going to
Mm,
lift all the restrictions and it's going to like go back completely to normal.
this is it,
It's
yeah.
Yeah. So it's in here in Europe, it went kind of slower, and so you didn't have this sort of large surge in cases, and also
Exactly.
you had a significant more vaccination. So
Hmm.
it could be a case where they just don't flatten the curve, sort of thing. You get a large number of cases at the beginning of the year, and then it go back down. Or you could then either have the other thing where you open slowly over a period of time and then you get less cases, but then that has a bigger economic impact. And so the mortality rate of Omicron is significantly lower than the ones that were initial. So it's coming down to more or less near the range of a flu. So,
Hmm.
but it's really transmissible. So you can get like a big shock to the system. So that
Hmm.
that seems to be more of earlier. What was it in December? They're having trouble. There's so many people that were sick that some of the banks weren't able to maintain the normal operations.
Yeah,
So it ends up being kind of a complication. But since they're apparently going to go through with the thing of fully opening, it'll probably be a big shock and then a faster recovery than if they had gone the other way. But again, that's kind of speculation because I'm not an expert with the
well, yeah,
diseases, so it's kind of like guessing where the market might go with that because if you guess that you're going to have a large number of cases and then it's going to reduce, you'll have potentially another supply chain problems going up here until
exactly.
February.
Hmm.
Yeah, and then also they have Chinese New Year, which is a lot of travel that happens,
Hmm.
and that's at the end of January, if I remember correctly, or no, yeah, end of January. So you
Hmm.
could have another wave going through. So winter might be a little bit complicated for China, but then if they do that, then maybe through the rest of the year they could have a bit of a recovery. That's a guess.
Well, yeah, that's the thing. I'm thinking that the way they are now is maybe just to get through it all in the
Mm.
next month or two, and then have maybe a summer of not a summer of discontent, maybe a summer of recovery, and hopefully, China will get back on the boat of just basically dealing with COVID like many of the other countries are doing.
Yeah, it's sort of you have to get the exposure to the virus either through a vaccine or through getting it. And with the
Exactly.
zero lockdowns, and low vaccination, they have it. So it has to be done some way, and if that's the way they're
Exactly.
picking, I guess we just have to try to figure out how the markets are going to react.
Exactly. Just touching on something that you said before with Canada and oil, we just want to look on the loonie as well, the dollar CAD,
Oh, right,
because
yeah.
in the last since the beginning of I keep saying the beginning of the week, the beginning of the year, whichever you wanted to take it, it's had this kind of like 200 pip drop on the dollar CAD, but then it's recovering nicely now, almost to the point of where it was at the beginning of the year. So because we've got Canadian dollar news as well at the same time
Right,
as
yeah.
NFP, employment change, unemployment rate, this, that, and the other. Could we see big moves on the loonie, do you think, as well?
Yeah, it could be. It depends on whether you get a miss and a beat on one of them and a miss and a beat on the other, and then they could go in opposite directions. That could give you a bigger move. Or if
Yeah.
they both go in the same direction, then the move could cancel it out. So
Mhm.
the thing is, the Bank of Canada is kind of like 50-50 on whether they're going to raise rates or not at the next meeting. And
Yeah.
so if you get a significant beat with the employment figures, that could change the math there a little bit more significantly. So yeah,
Yeah.
it could. That's probably why you have that larger volatility that you've been having for over the last week.
Mm.
And then of course, during the holidays, you get increased volatility just in general. So that uh, that band that you have there might actually continue to keep getting wider, though. But you're the
Yeah.
more technical guy there, so I don't
I,
want to
I'll
get
just
into your territory too much.
I'll just keep putting this up and down. It might make
Yeah.
sense a bit. Before you came on air, I was just telling the viewers about retail sales in America because we did have quite a big miss, a negative contraction of minus 0.6% and the last reading. Obviously, the readings are 2 months prior because
Right.
retail sales data comes out. So, but saying that as we go into the new year, obviously, and next month, are we expecting probably retail sales to jump not only for the holiday season, but obviously we had Thanksgiving in November as well. Do you think we're expecting possibly a bit of a, not a negative territory reading anymore for
Yeah, it just seems
coming up?
if we go from what the companies, the major retailers were reporting, they said that sales
Yeah,
had not significantly improved, but they hadn't significantly reduced. So it would probably be just a return to positive more than anything blowout, I would expect. But
yeah,
there are, I forget what the proportion of the large companies are compared to the smaller numbers that that don't have that aren't listed so that we could see their quarterly reports.
hmm,
So it depends if that proportion is big enough, and then smaller businesses saw a significant increase in their sales, then that could change the distortion a little bit, or they could see a significant decrease. But uh, it's usually the smaller ones that they have a bigger move to the upside than
yeah,
to the downside. So yeah, it probably would remain. And also, you had inflation coming down. So
yeah,
if inflation is coming down, presumably, do you have less demand destruction? And but still, inflation is higher than salaries, so people are still, making less money in real terms than they were, well, for several months now. So that would probably
yeah. I was
hurt
just
the
again
move.
mentioning we touched upon inflation, just a good sign. However, it's still going to happen anytime soon.
Yeah, it also seems that
So
the further down it goes, the harder it is. Say 4 to 3, you might take a little bit longer, and it might be a little bit harder. So yeah, that's the other
yeah.
factor to keep in mind. Yeah.
Exactly. It took 6 months to go 2% lower, but it's probably going to take maybe a year, like you said, to go from
Mm,
4 to 3, let's say, or from even 4 to 3.5.
yeah.
It's going to be trying to shift those unwanted pounds that
Yeah, the
we try and
unwanted
shake off.
size in the economy. Or
The data coming out. So I just want to touch upon the euro dollar just one more time. Detrimental decline in euro dollar for
Mhm.
most of 2022. Then we had the pickup because we found good support. But the last, as you can see, since the beginning of the week, we've had this very bearish candlestick, which means that we have, you know, sellers are back in the market and there's a bit more, it is looking a little bit more optimistic, but a lot of economists that I spoke to this week said it's just a slight correction and they are expecting the euro dollar to continue its upward trajectory in the near, just a little bit of a flash in the pan and we'll probably start moving higher for a lot of the dollar pairs.
Well, the general trend is to go higher, especially for the euro, because the ECB has more upward headroom to keep raising rates, but what the
Mhm.
Fed, it seems to be getting near its top. So the interest rate gap between the Fed and between the dollar and the euro is going to start support to the euro. But how, at least for now, possibly until March, that the weather can suddenly change and then the whole thing flips around.
Exactly. So keep an eye on the weather forecast, that's for sure.
Yeah.
So Daniel, the data just coming in now for the new jobs added 223,000.
Oh,
The consensus was just around 200,000. So a little bit more than, a little bit of a boost in the American economy. Obviously,
yeah.
it is still a little bit. Said on the last NFP engagement that we had, before the pandemic, 200,000 new jobs added, or in that ballpark region, wasn't such a bad reading, was it?
Yeah, no, for once it seems like the economists have got it pretty spot on,
Yes,
because for
they
was it
did.
for the last 5 6 times it's been really off. But yeah,
Yes.
but yeah, 200,000 would be kind of normal. Would be generally seen as a good thing. You usually see the stock market go up after that.
Hmm.
But there's still recovering. The labor force participation is still pretty low, and that's also contributing to the labor tightness problem. And
Hmm.
so, if you get the jobs number coming in a little bit slower now, it means that the Fed is might not be as aggressive. So
Hmm.
that could also probably provide some support for the stock market. I
Yeah,
would
that's
expect
true.
the dollar to have kind of been a little bit weaker out of that. As
Hmm. We've had a big spike on it, but it looks like it's basically going back to where it was when it just before the news actually
all
was
right,
announced. So we've had, let's just see, we've had a big spike of roughly about 50 pips, but now, as you can see, the body of the candle is only trading roughly about 10 pips. So it's kind of a bit subdued, this NFP. Just to touch on the unemployment rate as well, that's fallen to
oh, the
3.5%.
yeah, that's what I was just about to say. Yeah, the unemployment
Yeah.
rate went down. That's why you get the disconnect. I was gonna say there's probably some component there that changes it.
Yeah, exactly. Yeah, like you said, it should be a little bit weaker, but as you can see, it's actually um, on par at the moment. It's not really moving too much. Obviously, the initial shock of the NFP makes the market start bouncing, but we
Yeah,
are seeing just a bit of a subdued move as well. Even on gold as well, not really moving too much, about $10, but now it's retracing back nicely, roughly about $4 or $5 move. So nothing too much to sink our teeth into, unfortunately. Um, Average hourly earnings year on year, 4.6% versus 4.8%. So that's down slightly, and on monthly, 0.3% versus 0.4% last time around. So little bit subdued, only a tiny bit, but obviously a 1%, a tenth of a percentage point times the total
yeah.
population of America, it can actually be quite
It's not only
significant.
much. Yeah, it can.
Yeah.
Yeah, another thing is that the prior month was revised lower, so the economists weren't as off with their prediction, because it
Yes.
was revised lower by only 10,000, but still. So it's sort of like you get a bigger, above expectations, but then everything else is sort of below expectations.
Hmm. Yeah, exactly. I've also got Canadian dollar, the news that we just touched upon as well.
Right.
Unemployment change, 104,000. Where previous was only 10.1 thousand. So quite,
Why that's happening in Canada? So you get 1 month it's only five, and then another
yeah,
month it's 100,000. But
yeah,
the unemployment rate seems to remain relatively stable. So I
yeah,
guess it's more
true.
of a methodological thing.
Just down slightly, but yeah, it remains pretty stable from the previous readings for most of the year as well. So, just to touch upon, we've got ISM non-manufacturing PMI in a couple of hours, well, just over an hour as well. Do you think that could have any bearing on the dollar as we head into the weekend?
Oh, yeah, most definitely. It usually does. But it depends on, I guess there's more expectations going around on the Fed than, because PMI is kind of a lead saying, yeah, it most definitely usually does, but right now it depends on what happens and then depending on, and then within that context, I'd be looking at the PMIs, I think.
Yeah. Yeah, no,
Yeah.
yeah.
Sorry, I
That's what
was
I've been
thinking.
thinking. So I've got things in my head all the time about where the next market move is going to come. So
Yeah.
it's looking quite interesting. Just want to go back to gold quickly because we've on the we'll go back to the 4 hour chart because we had this nice trend to the upside for gold, and a lot of traders that I speak to are just saying there was a slight downturn or vice versa not so long ago. And obviously the natural thing would be the next psychological level of $1,900.
Right.
Would you say that less risky assets rather than going to moving away from the dollar because aggressively raising rates. They probably won't stop raising rates altogether, but
Right.
the aggressive 75 basis point for this year.
Yeah, that seems to be the consensus. But also,
Yeah,
apparently, even the central banker, you see
yeah,
the stocks of gold held by central banks is how is the dollar going to evolve? And that would well, buyer a buyer of gold, and so their economy hasn't been doing very well, so they haven't had extra money to be buying gold to support it. But
yeah,
now, if we get, as we saw with the COVID thing, if that gets through, then maybe in a few months their economy will be returning, and so then people will have more disposable income and start buying gold, and that could also give it a support, even for stuff. But then, of course, the other thing
exactly.
is when if the recession gets bad enough and you get the stock market going down, then people are going to want to have cash so that they can go
Hmm.
and buy up all the cheap stocks or whatever other assets that are going to be cheaper when you have at the start of the recession. So then you could see
Yeah.
gold also take a little bit of a tumble. So the depends on it all comes down to depends on the recession, which is kind of a
Yeah.
bit of a cop out for every analyst to say, but it's kind of true.
Yeah, but like just touching on recessions there, it's not only America that's supposed to be hitting recession. Like we said, it's global recession, isn't it? I mean, could
Yeah.
this be as detrimental as 2008, or have a lot of markets already kind of priced in that we're going to have a recession and it won't really be so detrimental in the markets, would you say?
Yeah, that's the thing is because it's actually kind of why I think that maybe there won't be a recession, or if there is, it's not going to be all that bad because usually when there's a recession, no one's expecting it. It sort of like suddenly creeps up on everyone.
Exactly.
And
Yeah.
I mean, there's always some people who are saying there's a recession coming, there's a recession coming, but like the 2008. No one was expecting that. No one was really expecting the pandemic.
Hmm.
The 2001 thing, no one also was caught a lot of people by surprise. So, um, now that everyone is saying this is sort of one of the first times, at least that I can remember, that everyone's saying that there's a recession coming. So that
Yeah.
might change. It's kind of like the market does the opposite of what everyone is saying it's going to do. And so,
Mm.
since everyone's saying there's a recession, the all the indicators are saying that there is. You look at the inverted curve and the what's happening in the industrial production and all the other factors. But people don't necessarily behave according to the data. So
Yeah.
this that. So it could be pretty bad. If you go through all the people who are kind of experts in it, they kind of failed to predict what would happen last year. So I don't know if we're going to really rely on them. But
Yeah.
the Fed said inflation isn't going to go up. It went up, and the Fed is now saying there isn't going to be a recession. So, and then you had all
Yeah.
the big banks in the United States. They're saying that there is going to be a recession. Uh, but it isn't going to be so bad. But they're also the ones who said that the stock market was going to go up last year. So are we going to believe them? So I mean, you know, that's all the data. So you can pick which expert you want to follow, and he's going to probably tell you what you want to hear.
So basically, watch this space, and we'll see what happens. Basically,
Yeah,
for this year,
yeah.
yeah. But
Pay
yeah,
attention to the data and see what happens.
yeah, exactly. But like you just said, 2008 creeped up on somewhat, creeped up on everyone, and we didn't realize how detrimental it would be. There's been recessions in the past, but the
Yeah.
2008 one was very difficult. But this one, in inverted commas, if it does happen, a lot of traders are kind of expecting it, so it hopefully won't be such a big detrimental hit on the market and on stocks as well. So
Yeah, there's
um,
plenty of warnings. It gives you plenty of time
exactly,
to get ready, and
yeah.
also you have to factor in there might not be one, so it's get ready for that too.
Exactly, exactly. Okay, then. All right, that's great. Thanks for joining me, Daniel. What we're going to
Mhm.
do now is just go and have a look at how the markets are performing. But let me just have a quick check. Yeah, oil's just spiked up just roughly about 50 cents. Euro, dollar, and cable as well seems to be just kind of hovering roughly about 50 to 10, 15 pips. Not really too much of a move on the forex pairs, especially, and gold as well hasn't really moved too much. It's just pushing a little bit still to the upside, but not even a $10 move there. So nothing too much of a big shock in the market. And like you said, the analysts seem to have got the consensus correct for the
For
NFP
once.
numbers. Yeah, for once. I think the last time around, we were had a jobs number of roughly over 200,000 more than what we thought it was going to be. So,
Yeah.
yeah, these are things we have to look out for in the markets. All right, Daniel, that's great. Well, thanks for joining me this time around. And
Thanks for the
we've got
invitation.
no problem. Anytime. Your insights always valued, and good to get to grips with the markets and what's in store for the next month, and obviously going into 2023 as well. So thanks a lot, and we'll speak again next time.
Yeah, take good care.
Okay, great. Thanks a lot, Daniel.
All right.
Okay, bye for now.
Bye.
Bye. Sorry about that. Okay, just had to clear my throat. A lot of talking. Okay, so thank you for joining me. I will just have one more look through all the basket of the currencies that we've been looking at today. So euro dollar, like I said, it's only moved roughly about 10 pips, 10, 15 pips. We're above the 105 handle now, at least, which is quite significant. And we're just seeing now if we're going to start moving higher than what we were doing before. So, excuse me again, we're seeing now after this consolidation period that we saw not so long ago. This is on the 30-minute chart, by the way. We saw this break and confirmation to the downside, and this was roughly about another 50, 60 pips. So will we get back into positive territory for the euro dollar? Very, very big movement in the market, and we're seeing now what can be really taken from this NFP. It seems that there is a slight recovery in economy for America, and we're now looking to see in the near term where we can go and how big the American economy can grow for the next year, especially. Excuse me, I keep needing to apologize for my throat, just gets a little bit dry. So at the moment, just hovering above the 105 handle. So a very significant NFP, because we are, even though it's only moved 20 pips, we are above another psychological area. If we had dropped below the 104 handle, then this would have been very detrimental for Europe, especially as it looks to bounce back from having no Russian oil and gas for this year. But as I said, we are looking at a slight correction in the euro dollar, and we are now seeing that prices are expected to start moving higher. So nice consolidation on the daily chart, but we are expecting another move to the upside now. So we'll see if that happens in the near term as well. But let me know what you think. This video will be posted on our YouTube channel at the end of this webinar. And also not to forget that me and Daniel will be going through a Q1 report in the next week. These details will be available on our Telegram and social media channels. So we go through basically what's expected for the next 3 months in the economy for most of the big movers in the market, and also what's happened at the back end of 2021 as well. Sorry, 2022 as well. I'm getting too ahead of myself for the years. So with that being said, take one more look on gold as well, because I've got a few questions on gold. Gold has moved roughly about $10 since this NFP has begun. We are now seeing possibly a bit of an upsurge for gold, because it is looking like safe haven assets will be very, very tradable in the next few months, especially when the dollar will take a little bit of a downturn, supposedly. So keep an eye on that. Like we said as well, core inflation data coming out next week. That'll be quite a big mover in the market. Lots of things expected out of those numbers, but we'll see what's going to happen in the near term as well. So thank you very much for joining me. I've been David Kinley for Orbex, and as I said, we'll see you shortly for the Q1 report that'll be coming up shortly, and also for the next NFP engagement at the first Friday of February. So very exciting times coming up, and we'll see what's in store for the market. So any questions, please feel free to ask me. I'll be still online for a while later, and as I said, this video will be going on our YouTube channel, so feel free to connect and send me your thoughts. What are you trading on? What are you expecting to happen for 2023? Always interesting when we get into a new year, because it's obviously new dangers or new opportunities for traders. And so let me know what you think, what you're trading on. So thank you very much for joining me once again, and bye for now. Catch you at the next one. It's been a pleasure. Thanks a lot.